Hello, Maverick Traders. This is Rob Reinhold. It's good to be back behind a seat in the currency room. Another Friday is here, and we are going to wrap up March trading. I'm joined by Mr. Ankit Sharma, and we're going to break down exactly what happened last week. We're going to spend a little bit of time on last week, and then we're really going to get into the next week because trading's been relatively good. Now, look, I say relatively good. It is not as good as it was versus the market in January, February. Those markets were great. These markets are just good. They're just good. We're getting some decent movement, but we're not getting monster moves like we got. However, it's much better than our low volatility periods we've gone through over all the years. So this is a good trading environment. Let's talk about what happened last week. Equities, they held in. And there was a lot of things that could have knocked the equity market down, but it held in. We had the Fed meeting. And the Fed raised interest rates by 25 basis points. And by the end of the week, the dollar was right where it was at the beginning of the week. However, some things did change. We saw bond yields collapse. We're about 3.3 on the 10-year bond. We were just talking about 4% like 5 weeks ago. This is a huge move lower in bond yields, which is going to put a lot of pressure on that US dollar. We've got gold looking to break out to new highs. We also have cryptos remaining very bullish. So when you take a look at all of the things that people like to buy when they don't like the dollar, they're actually doing really well. Gold, Bitcoin, cryptocurrencies, people like to buy those when they don't want to be in US dollars. We had a ton of news last week. Let's go quickly over this calendar. I can't even go over all the stuff on this calendar. So if you need to, pause the screen, take a look at it. I'm just going to go over just some of the major ones. I want to point out the CPI report out of the UK on Wednesday. That came in very, very hot. The pound actually sold off on this news. And I wanted to talk a little bit about this one because typically what we've seen is higher inflation means the central bank is going to get more aggressive, which means that the currency is likely to rise. We've seen that across the board. We didn't really see that on the day of the announcement of the pound. The pound actually sold off on Wednesday. And the UK is in a very difficult spot. I'm not going to get into UK politics. I'm not going to get into what's happened, but their economy has suffered because of Brexit. And I know that maybe some of the people living in the UK are going to disagree with me on that. Look, this is not a political statement. But when you take a look at some of the things that are happening in the economy, they are trailing the rest of the world. They are underperforming the rest of the world. And so the central bank is in a bind here. If inflation comes out really hot, they can't really aggressively raise interest rates. And so it's a really bad thing. So we typically see hot inflation numbers make the currency rise. We didn't really see that in the pound. That being said, we'll take a look at the chart on the pound. The pound actually looks more like a buy than a sell. We already talked about the Fed statement, the press conference. Let's go past that. We had the SNB come out. They raised interest rates by 0.5% as expected. Not that big of a deal. We did hear from the Bank of England, and they raised interest rates by 0.25% as expected. So lots of central bank movements, but everything was very telegraphed, and so there wasn't a lot of surprises behind it. If we take a look at Friday, we had European manufacturing. It came out as a mixed bag, really a mixed bag. And so let's get into the numbers. Let's get into the charts because a lot of times you take a look at all this information and it's very conflicting. And you say, oh my gosh, like some of it's good, some of it's bad, some of it's doing this. Sometimes that can be overwhelming, which is why we simply say, look at the price action, look at the charts, what actually happened. So last week, with all of that movement, all the everything, the equity markets went up a little bit. Crypto went up a little bit. Gold was pretty flat. As you can see here, after all that volatility, all that news, the market pretty much said we've already priced it all in. So there wasn't a lot of movement because all the news came out as expected. Here's the S&P. As you can see here, the S&P is short term. We are definitely moving lower. So over the last month, we are definitely in this downward channel. However, when we take a look at all the moving averages, we're basically flat. We're at the 200-day moving average. The 50-day moving average is sloping up. The 20-day moving average is sloping down. as you can see, this is not a clear picture. This is not a clear trend of what is going on. What we can say is that the S&P short term is weak. Medium term and maybe long term, it's about neutral. So we're not really getting a good indication of where equities are going to go. So I think you have to throw out all of your correlations of equities. And a lot of times, again, we look at correlations. When the market is moving up, typically that pulls the Aussie, the Kiwi, the CAD up. When the market is tanking, you typically see the dollar, yen, Swiss franc outperform. Throw away all those correlations. They are just not relevant at the moment. Ankit, do you want to add anything on just how the correlations really just aren't there at the moment?
I mean, absolutely. I mean, we have seen things kind of getting away from the way usually things move. And again, things are all over the place. I mean, looking at equity markets, we have S&P that's lagging, but then we have the NASDAQ that's about to break out. There's definitely a lot of things are happening. And again, the reason I think behind this is that we are now very much focused on what's happening with the bond yields, what's happening with the futures, where the yields are heading. I think a lot of that is really distorting the picture. It's the same way as things were back in 2021, where, because of the rising yields, we have seen a lot of distortion. So I think that's exactly what we're seeing here. So this is a great time to not look at, the causation. If this happened, that happened. I think what you need to look for is where the relative strength and weakness is. So I think this is a good time to focus on that instead of looking at the markets and try to make sense of it. I think we need to focus on that.
I agree. And just focusing on the performance. This is last week. Now, if you take a look at the performance, Euro was the best currency, up 1%. Kiwi was the worst, down 1%. That's about an average week of movement. That's typically what we see on an average week. As I said, we're not in a great trading environment like we saw in January, February, where things were moving 2-3% per week. But this is a good, solid performance. This is one of the things that Ankit just said. I think a lot of people are looking at this euro saying it shouldn't be going higher. I could write an essay on all the reasons why the euro shouldn't be going higher, but it is. This is where you should throw out all of the things that you think should happen based on economics, based on correlations, and just look at the price action. And you could make a case that the Aussie and Kiwi should not be that weak. If equities have held up and the NASDAQ's looking to break out, why are the Aussie and Kiwi so weak? Guess what? You don't need to know why. You don't need to know why. You just need to know how to look at the price action. Also, take a look at the yen. We're going to spend some time talking about the yen because it is acting in a more predictable manner than it has over the last 2 years. So we definitely want to cover that. Cryptos, look, they had a little bit of a down week. As you can see, basically Bitcoin and Ethereum were flat. Bitcoin Cash, no one really cares about it. It was down. And then Litecoin, no one really cares about it. It was up big. I'm going to call this cryptos were fairly flat on the week. So let's take a look at just the charts. We already took a look at the S&P. This is the International World Index. As you can see, it's a carbon copy. So we have those two things moving together. Right now, the picture of equities isn't super clear. And so when things aren't super clear, just don't use it. Just throw it away and say, okay, we'll come back when it makes a little bit more sense. Here is our crypto basket. This is the 4 cryptos equally weighted against each other that we watch. And you can see we're at the top of the range. I don't know if we have the strength to break through because I do think that we're going to need a few things to happen for cryptos to really take off. Number one, I think the dollar has to weaken substantially from here. I don't really see that happening. I see it staying a little weak, but not all that much. I think you have to see a big breakout in gold, and I think you have to see interest rates move even lower. I just don't see the case for that. But remember, this is all stuff that should happen. I just gave you a speech of sometimes that doesn't work. So guess what? If cryptos break out, I'm going to be a bull. Even though all the stuff I just talked about may not happen, cryptos are much more bullish than bearish at the moment. After a really, really busy week, we get a little bit of a break on economic news. The only thing I really see all that important is Aussie CPI on Tuesday night, and then GDP on Friday for the Canadian dollar. And then probably the biggest report of them all is this core PCE price index out of the US. This is the Fed's preferred inflation measure. This is the one that people are going to be watching. If this number comes out super, super hot, it could spell some real trouble for equities because it's going to put the Fed back in play. I actually just saw that the odds for a Fed rate hike in the next meeting are only 25%. That is down substantially. If this number comes out hot, that's going to change the whole dynamic, and the market is not priced in for that. So I think on that Friday, the US core PCE price index is the big story of the week. All right, let's jump into our currency analysis. We're going to go through each currency. We're going to talk about the trend score and the velocity score. Let's start off with the cryptos. Look, as a trader, I've been trading for 25 years. And I always say I'm like a moth to flame, meaning I'll trade anything. I will trade anything. I will trade any currency. I will trade any cryptocurrency. I'll trade any symbol if it's working. And by working, let me quantify that. It has enough volatility, it has a predictable trend, and I can find good entry points. Okay, I'll trade anything. So a lot of times I'm just not interested in crypto because over the last year or two, it hasn't been that great of a trade on the bullish side. There's been a few little moments in there where I'm like, hey, this is a good opportunity. And I actually think this is one of those moments. Let's take a look at Bitcoin. As you can see, Bitcoin here is high basing. This is a really solid pattern. When you go sideways for 2 months and then you break out, and again, it really was only 1 or 2 days of a breakout, and then you do this. This is a rising high base. That's a really good bullish pattern. It doesn't mean it's guaranteed to break out and run, but of the 100 times I see this pattern, I'm going to go ahead and say that 65 to 70% of the time it does break out and run. I like Bitcoin here. Bitcoin is actually my favorite crypto, but we need this thing to break out of this space. We need to break out of this space. 29,000 would be where I would have an alert, and then I would take a look at everything to see if I wanted to get in when that alert hit. We go through the rest of the cryptos. You can see the Bitcoin Cash, it's zero. It's not ready to go anywhere, so I'm not interested in that. Ethereum is okay. So here we have the same pattern, but remember, Bitcoin was a rising high base where it ripped higher and then it was creeping higher. This is more neutral, so it's still okay. But remember, we're trying to buy the best, the thing that's looking the strongest. And right now, that is Bitcoin in crypto. Then we take a look at Litecoin, and you can see it is unclear. It is so unclear. We don't make unclear trades. So for me, Bitcoin is really the only thing I'm interested in starting the week, next week. Let's jump into Forex. Dollar. Dollar has pulled back. Now, I want to really focus here on the longer term viewpoint of the dollar. So we've got a whole lot of things that are just showing conflicting signals. We had shorter term and intermediate term moving averages moving lower at the first of the year. 20 and 50 was moving lower. 200-day was actually creeping higher. As you could see, what's happened here is that these have turned. So right around the 1st of February, we started to get average prices moving a little higher. However, we got this long-term 200-day moving average basically starting to flatten out. It's losing momentum on the longer term basis. So here we have just so much conflicting stuff. We've got a 20 that's now starting to tip down. We got a 50 that's still sloping up. We got a 200 that's going sideways. When things don't make any sense technically, don't bang your head against the wall. Don't try to figure it out. Ankit, do you have anything that you want to share with the dollar that's going to make people understand it more?
I mean, I think dollar I think this is again a good time to just take a look at price action. It's not going anywhere. And we talk about reasons why it should be bullish, and we can talk about why it's bearish. I think right now, I don't have a strong call on this. We are sitting at a 50% retracement level from where we were back in, the rally from February lows to this March highs. So whenever we get to this point, I like to steer right in the middle here, which means that it's a 50-50 chance that either it's going to break up or it's going to break down. So I think the way I'm looking at dollar is to be very flexible. And like I said, I'm paying very close attention to what the bond market is telling us. So because so far in the last 12 months, I would say that the bond market has been more um, right about the market direction than the stock market has been. So if the yields are pulling back further, I think that will be diminishing the outlook for the US dollar. But again, right now, we don't have a confirmation yet. So either one or the other will happen. Either the dollar is going to get pulled down with the bond yields, or the yields going to rise again and the dollar will firm up. So right now, I think it's a 50-50 chance. So this is a good time to take a look at other currencies that are moving till we get a confirmation. So the key is looking for confirmation, either for a bullish side or for the bearish side. And we will see that in the next upcoming week.
And I think you're exactly right. Go look at other currencies. So Ankit, why don't you break down the yen here for everyone? Because I know we spent a good amount of time talking about the yen, and I really liked your take on it.
Absolutely. And again, yen has been one of those currencies that does really well in a risk-off environment. And this is something that really changed last year because of the ultra dovishness from Bank of Japan while all the other central banks raise rates. That seems to be coming back into the markets, which is a good thing because we always like to look at those correlation. And this is the one currency that's following that correlation. And those tails that we see on this Japanese yen kind of explains when we see those turn around the markets, yen pulls back. And on the other hand, every time market pulls back and we see yen rally. So this is where the action has been, and there's an opportunity to be had on both sides. The one thing I do want to point out is that when you are trading this kind of price action, you're trading that risk on and risk off sentiment, meaning that whatever is happening in the equity markets is affecting this currency. So if you're a trader that want to take advantage of that back and forth, I think the yen is the right place to be. We don't want to be married to an outlook. I think yen is likely to do back and forth, just like how the equity markets are doing. Until we can really break out of the range in the equities, I expect the back and forth to continue. And I think this is a great time to be looking at yen both on the long side and on the short side, depending on what the markets are doing. So I just wanted to kind of point that out, that we have been so used to trading yen just on the short side. We haven't really played as much on the upside. I think this is finally coming to life here where it can be played on both sides.
And I think you just hammered that point home. Look, if equities go lower, yen is going to do well. It did well over the last couple of weeks when the equities moved lower. If we get a break lower in equities, you want to be looking at long yen. But as Ankit said, whenever the market had rallied, the yen pulled back substantially, pulled back quite a bit on these days that the market did rally. There is opportunity on both sides, but as Ankit said, it is 100% tied to the equity market at the moment. So if you're trading yen, you are trading the equity market. Make sure you're aware of that. If you don't want to trade the equity market because you think the equity market is confusing at the moment, then guess what? Don't trade yen. Very, very simple. So if you said, okay, I don't want to trade dollar, I don't want to trade yen, then let's go find something to trade. Here is a Swiss franc. Swiss franc is above the 20, above the 50. Things are looking okay. This is mildly bullish. I could have written you a very long paper 2 weeks ago when Credit Suisse was tanking and putting all this stress, and the SNB and the Swiss government had to come and basically say, we will print as much money as needed. The Swiss franc should have gone down. It went down for like a day or two, but it stopped going down. It's going back up. You can't ignore the price action. So if you still think to yourself, oh, the Swiss franc is going to collapse, you need to admit you're wrong, because it didn't collapse. In the worst moment, in the absolute throes of the worst panic, the Swiss franc held in and actually has gone up over the past week. So I've got to be mildly bullish here on Swiss franc, but it's only a +1. So let's see if we can find something better. And we did not need to go far because here we are. This is better. Euro is, in my book, the number one currency. I've liked it for the last 2 weeks. It's been my number one currency on the long side. It is going into this week as my favorite currency as well. So I'm basically looking to buy euro crosses anytime we get pullbacks or bases. As you can see here right now, euro is in a pullback. We are pulling back from a new swing high. So I expect this will probably last another day or two. I want to find when it is going to turn around, and I want to be a buyer of euro. Even if you don't think the euro should go up, it's the strongest currency at the moment. Come over here to the pound. You can see the pound is also looking bullish here as well. But I really want to point out these last 12 candles, because I want you to take a look at most of the bodies are in the middle, and then you've got these long legs up and down. These kind of candles are very, very difficult to trade because every breakout sells off. Every breakdown is bought. On an intraday basis, you can see that there's a lot of movement intraday, but there's no real movement other than one or two candles. I think the pound is going to be a tough trade here. I do think it's going to move higher, but I think it's going to be a very frustrating trade. I think the euro is a much clearer entry, and also the yen, if you want to look at it. All right, so euro, Swiss franc, yen, they all look like strong currencies. The next three are just going to be the weak ones. CAD has broken down. We have officially broken down from this 4-month low base. We didn't break down with a ton of velocity, but it's a breakdown. So for me, I can be short CAD. At the moment, we haven't really seen any velocity at the moment, so I'm waiting for a little bit of velocity, but CAD could be shorted. As you can see, here's the Aussie. The Aussie is also in a really negative situation. Any more selling here, and you can see this has got negative velocity right now. Right here, right now, on this Friday that we're recording this, it has negative velocity. This could be sold possibly next week, early on in the week, because it's going into the weekend with the weakness. It's likely to start the week with weakness. Coming over here to the Kiwi, we've got more of a base here forming. So we've got this descending triangle. These are bearish. We just need to wait for the break. So we see CAD weak, we see Aussie weak, we see Kiwi weak, but the only one that's currently weakening at the moment is Aussie. So if we stack them all up and take a look at everything, euro, yen, on the long side, Bitcoin and Ethereum, but Bitcoin number 1, Ethereum number 2. In the Forex, euro number 1, yen number 2. We come to the velocity score. We don't have a lot of things with a lot of velocity at the moment. So whenever I end a weekend like this and I say, oh, there wasn't a lot of velocity at the close on Friday, it kind of tells me there's probably not going to be a lot of velocity at the open on Sunday. So I'm definitely looking for activity for myself, maybe Monday, Tuesday, Wednesday, and maybe later. I want to let things develop to get a little bit going. All right, let's take a look at some of those possible trades. So we've got a few. We've got Bitcoin, and then let's take a look at euro versus Aussie. I'm going to take a look at Bitcoin first. So Bitcoin, as you can see here, we are high basing. We are definitely high basing. We are going to get a few of these things that run up and trigger. So people always say, well, Rob, how do I know that it's going to be a true breakout? I mean, we've drawn this line there. How do I know for a fact that 28,626, or wherever you draw this line, is the true breakout? You don't. Nobody knows what the true breakout is. Now, look, people can look at these indicators. There's some things that might help you, but in the end, some fail and some break out. We like to say that the breakouts that don't fail, they typically have things pushing them, other things. For example, this breakout happened on a Friday afternoon. That is a great time for a false breakout. I mean, just think, are a lot of people going to be piling in on a Friday afternoon? No, people are winding down. So when you see these things, they're a good sign that, okay, that's not a great breakout point. But let's say early next week, we've got some news. You also see gold breaking out. You see dollar weakening. Okay, that breakout probably has more energy behind it. But let's say you see a breakout happen and none of that stuff is happening. I would be very wary. In the end, I know you got to take the position, you got to trust your charts, but there are definitely some things you can do. So basically, what I'm saying is, I really like Bitcoin on the long side here on a breakout, but I can't really say at this point when the breakout is going to happen and if it's going to be a true breakout, or do we need to spend more time in this space? So I would highly recommend, if you do take a position on a breakout somewhere around 29,000, I would take a small enough position size where your stop can be very liberal, like all the way down here to like 26,750. So you might have to start with a quarter position, take a small position with a very wide stop, and then add on to the position if it's working and move up your stop. That's going to be the best way to trade this one here on Bitcoin. And then the only other pair that I'm interested at all at the beginning of next week is Euro Aussie. So Euro Aussie, I'm here on a 4-hour chart. You can see that we've been in a very nice uptrend. Runs up, pulls back, runs up, bases, breaks out, bases, breaks up, has a pretty big pullback, and here we've made up to new highs. So when we go in and take a look at where we are right here, we are high basing. Now we could go into a deeper bit of a pullback next week, but at this point, I'm looking at a few things. I'm looking at a high base breakout above 162.50. So I would definitely have an alert there. Say, hey, 162.50 is my entry point. I want to look to get in if it breaks out of that. If we pull back deeper, I also want to start to get interested around this last support level, around 160.60. It's going to be right around this area here where I want to be looking to see, is it going to bounce off this level? If it does, I want to take a shot there and have a stop underneath this support point. These are the only two trades I'm interested in. Ankit, is there anything you're interested in?
I think we're on the same page here. A lot of the euro crosses, especially Rob, if you want to look at weekly charts, I really start off from the weekly chart to see, where these things are heading, because we haven't seen these things move. I mean, in the last few months. So we are finally seeing a little bit more interest in this. So this is where I start to get a little bit more interested in this, because I think we are slowly building up momentum here, because after consolidating, going back and forth, I'm talking months now. So when you start to see things break out, I mean, these things will have a lot more to run its course before it finds the pause here. So I do like on a further upside, on further breaks, relative strength of weakness is just telling me that this is the right place to be. Same thing goes with the Euro Kiwi. Again, this is a great time to diversify the risk as well. It's a split call right now between the Aussie and Kiwi. Maybe this is where I can take a half a position in Euro Aussie and half a position in Euro Kiwi, and same thing goes with the CAD. I think this is a great time to do some diversification, where once we have a better idea what the euro is doing, we can spread out that risk and use the other currencies that are showing more weakness to pair with. And timing-wise, one day we have Aussie being the worst, and the other day we have Kiwi being the worst. I think at the end, to capture the move, I do like, as a basket, I like euro to the upside. Now, the question is, what I want to pair with? I think there's, if we just follow that trend score, it gives us a good indication of where we want to be. Remember, this is the kind of play that I like it a little bit more on the longer term, which means that I want to be trading in on a higher time frame, maybe on a 4-hour chart on a minimum, where we have enough time for this to develop. And each time we see these pullbacks, I think these pullbacks are a great time to kind of look back into the trade. I mean, in every single trending move, we see pullbacks, but pullbacks are not a reversal sign. I think it's just a short-term pullback and then I get bought out very quickly. So I think that's the trade that's working here. And as always, as we go into next week, we'll continue watching where the relative strength of weakness goes, what the dollar is going to do, and what the yen is going to do. In between, I do like some of the opportunities as well, like Euro Yen, Rob, if you want to pull that up. Same thing. I like Euro Yen on both sides. Let's say next week the markets has calmed down. I would like to, play this pullback that we went from 143 down to, 139. Now, if this start to rebound, I think we can easily get this rebound back to 143. Again, this is a range-bound trade where we touch the support and now we can follow and, test the resistance. So that's another play that I'll be taking a look at. Again, but that will be basing on day-to-day basis what the market does, and based on that we can put our strategy out there for these markets to capture. So that's my outlook, and we'll be again keeping everyone up to date in the daily updates and change our outlook accordingly.
I really like this euro yen on the long side if the equity markets have a good jump at the first of next week. I think that's a great trade because this yen is correlated. It's negatively correlated with the equity market. So if the equity market rises, it's going to push that yen down, and the euro is the strongest currency at the moment. I think that's a great trade on euro yen. To wrap this up, look, equities are messy here. They're messy. They just are. So throw away that idea that we're going to get lots of push and pull from the correlations in equities. Let's just focus on what's moving at the moment. And really, we're looking at a few things, a few cryptos and Euro Aussie at the moment. That's about it. Well, that is the currency roundup. Thanks for joining us. Have a great weekend. Goodbye, everybody.